Hello, and welcome to another edition of CMS Forex News. This is Alexander Shapiro, and today is May 14th, 2008. In Japan, prices that corporations pay for their goods grew at a slower annual rate in April compared to March. However, the 3.7% increase was higher than expectations. On the month, prices were up 0.6%. The main catalysts for higher prices were petroleum and coal products, steel, and processed foods. The Japanese current account surplus rose to an unadjusted 2.88 trillion yen for March. This was, however, a decline of 12.3% compared to the same time last year. The accompanying trade balance figures showed that imports were up 13.2% on the year to a record 6.1 trillion yen. Exports grew by 2.8%, slower than in February. In Australia, wage inflation in the first quarter was lower than economists had forecast. The index rose 0.9% compared to the fourth quarter and grew 4.1% on an annual basis. The Aussie was weaker versus the US dollar following the news. It fell 100 pips, finding support at 0.93. Lower inflation eases the pressure on the Reserve Bank of Australia, which had been rather hawkish regarding stamping out inflation and keeping rates at a 12-year high. The Aussie-Yen pair has been in an uptrend this week, which stalled overnight. Stocks did well in Sydney and risk appetite was intact in the markets, so the consolidation here shows the weakness of the Aussie during today's session. In the UK, the number of people claiming unemployment benefits rose by 7,200 in April. The numbers for March and February were revised to show that claims rose during those 2 months as well. It's the first time since June 2006 that the claimant count was positive for 3 months, and implies that the UK labor market is starting to weaken as the economy sputters. The quarterly inflation report explained that upside price risks will remain high for the next several quarters. Thus, the Bank of England will be hard-pressed to lower rates at a slower pace than originally planned. Industrial production declined 0.2% in March, and the annual pace of growth slowed to 2%. The higher euro abroad and tighter credit conditions at home are limiting the domestic and foreign demand for goods, hurting orders and therefore production. In the U.S., inflation was kept in check during April. Consumer prices were up 0.2% on the month, with core prices up only 0.1%. Although both numbers were below expectations and helped to boost sentiment on Wall Street, the dollar weakened as concerns about inflation may have been overstated. In annual terms, inflation cooled to a rate of 3.9% and a core rate of 2.3%. With the Fed seemingly done cutting rates and switching their focus on stamping out inflation, today's data was a welcome sign for policymakers. Overnight, the dollar gained against the euro and reached an intraday low following the European production data. At the New York session open, the Tamer CPI data gave the pair support and weakened the dollar. By 1:45 Eastern Time, the pair had reversed last night's losses and was trading at 1.546. It was a similar story in the pound-dollar pair. Following the weaker employment data out of the UK, the pair set a low near 1.9365. From there, the dollar gave back its gains in a rather volatile start to New York trading. By 1 p.m. Eastern Time, the pair was trading near 1.945, close to 80 pips higher than its low. The dollar-yen pair continued its uptrend started at the beginning of the week, finding resistance near 105.4. Dipping initially after the CPI data, the dollar regained its levels prior to the release as U.S. stocks performed well in the first half of the day. Tonight, New Zealand posts retail sales and manufacturing PMI data. Overnight, we get CPI data from the Eurozone and Germany, which will also release its GDP figures. The U.S. has a busy day tomorrow. It will reveal jobless claims, the New York Empire and Philadelphia Fed manufacturing indexes, industrial production, net foreign flows, and an index for the housing market. Wishing you good trading. Join us again tomorrow right here at cmsfx.com.